what are some solutions? Like, what are some different portfolio loans where, somebody has a situation where they've been self-employed for maybe 1, 2 years. They got a lot of write-offs. Their tax returns probably don't show the highest type of income. What are some solutions that Northpointe Bank is offering?
Sure. No, I mean, one of the most common, I would say, it's called a bank statement program. So let me just give you a quick background on this program. Essentially, we look at someone. Let's just throw an industry out there. Let's say someone owns I don't know, let's say a liquor store, okay? And let's say in your tax returns you show X and Y dollars, okay, but not quite enough to get them where they need to be. So what do? We look at bank statements. Now, based on the profession, we use a certain percentage of, because we can figure out profit margins more or less. Some professions, you make a lot more profit. Some are not as much, even though the top number looks good. So we figure out, let's say a liquor store, you deposit money every month for, say, 12 months. So let's say we deposit, let's throw a number out there. Let's say $15,000 a month you deposit into your bank account, your business bank account. We'll look at a 12-month history, and then we'll figure out what percent of that should be profit based on the industry, and we'll give you credit. So if you deposit $15,000 a month, and they're saying that 50% of what you deposit in theory from the business should be profit, then essentially it's $7,500 a month we have to use for income. Pretty straightforward. We can do a 12-month average if it works better, or a 24-month. We can look at both ways and see what gives you the most income. We're okay with either of those. So that's the bank statement program. And it's a fixed rate mortgage we offer in-house. And again, this is a great program for someone who maybe makes good money, but not on the tax return. We do these all the time.
So what do the rates go on there? Are they above, above prime?
Yeah, I mean, typically, let's just say hypothetically an interest rate, let's throw a number out there again. Let's say a 30-year fixed rate is 6.5%, okay? On one of these loans, they'll probably be low sevens. Maybe 0.5 to 0.75%, almost a no-brainer if it gets you the house. Another program I'll talk about real quickly is geared toward self-employed borrowers, yes, as well as maybe recent retirees or people that are considering maybe doing this, buying a house, but, toward the end of they know they're going to be out of the, they're close to retirement age and want to buy a house. What can they do here to get themselves a good chance to qualify? And these are people that have maybe pension income or just getting ready to retire, maybe have some Social Security income. How do we get those people to the next level? If they know they can afford the house, but, based on the income they show right now, they can afford it, but long-term, they're a little skeptical. We have a program called asset depletion. So what we'll do is, let's say you have a 401k, and let's say you're like 62, 63, you're going to retire soon, but not quite yet. You're not drawing from it yet. We'll take what's in your 401k or one of your annuities or any of your large assets you have, CDs, and we divide it over 7 years, which is 84 months. So let's say you have $500,000 in your 401k, you worked your whole life, we divide that by 84, and that income can be used in addition to what you have for Social Security and pension. So it's a hybrid. So it's just a way to generate more income to help people to qualify that maybe, a little concerned long-term. This is a way we can make the numbers work on paper. I'll mention one more really quickly, just I think would be very beneficial. We talk about, self-employed borrowers having a 2-year requirement to being self-employed. They want to see 2 years of tax returns. Well, we have a portfolio program in-house. We call it a prime non-agency loan. It's just a loan we keep on our books where we'll consider, if you've been in the profession more than 5 years, let's say, for example, you were a carpenter and you worked 5 years as a carpenter under someone else, and now last year you became a self-employed carpenter. We'll let you use 1 year of your tax return plus a year-to-date profit and loss, and we'll let you use that to qualify instead of the 2-year waiting period.
Well, that's beautiful, and that makes sense.